In this information age, information is everything. If you can assess the right information and take your investment decisions based on what the smart money is doing, what the key indicators tell us, what the media is telling us, and what the retail investors are doing, you will surely be ahead of the crowd. You will preempt the market instead of following the herd. With the invention of internet, we can access the right information with the click of buttons, and it is indeed our responsibility to do our due diligence and analysis to maximize our gains. It is especially critical when the stocks are overpriced and the valuations are going through the roof. And the recent hype in the market can be gauged from the fact that Berkshire Hathaway, led by one of the smartest investors on earth, is holding more than 149 billion US dollars in cash equivalents and short-term treasury bills at the end of the third quarter, which is up from 144 billion in the previous quarter. This is a red flag for anyone who expects that the stock prices will keep on going up. Warren Buffett is one of the smartest investors in the history and has been increasing his cash pile as the valuation reach enormously high levels. He is indeed expecting a market crash, which will be revealed in some important data and information. And let me tell you, the magnitude of correction which he is expecting is going to be humongous, since he has never had such an enormous cash position ever in his lifetime. We will soon go through an important piece of information that will shock you, but first, here is a glimpse of the current market state, which is revealed by the astronomical increase in the price of S&P 500 recently. Before we look beneath the surface by looking at a critically important piece of data and also an indicator invented by Warren Buffett himself, kindly make sure to leave a like and a comment to bless the YouTube algorithm. Also, if you would like to see more content like this, kindly consider subscribing, since I release videos on market news, stock analysis and personal finance each week. Your support will mean world to me. Thank you. And now let's have a look at the important data that I mentioned. So here is why Warren Buffett isn't buying stocks right now. Berkshire Hathaway bought only 3 stocks in the last quarter. Buffett is no doubt eyeing the stock market's valuation, which is at its highest level in 20 years. Following Buffett's cautious approach could be a smart move for other investors too. Buffett's mentor was Benjamin Graham, who is the father of value investing. Over the years, Buffett might have drifted away from a purist focus on stock valuations, but I can say with confidence that he is still a value investor at heart. With this in mind, take a look at the following chart. It shows the cyclically adjusted price to earnings for the S&P 500 index over the last 60 years. The CAP metric, popularized by Yale professor and author Robert Shiller, reflects the price of the S&P 500 divided by the average earnings over the previous 10 years adjusted for inflation. And it is quite obvious that the S&P 500 valuation is at its second highest level that Buffett has seen since he took over Berkshire Hathaway. The only time the cap for the index was higher was during the period leading up to and shortly after 2000. Of course, we all know what happened after the market valuation reached such a lofty level. Stocks plunged. It took 7 years for the S&P to fully bounce back, and then it nosedived again with the financial crisis of 2008 and 2009. So of course, Warren Buffett is fully aware that in a bubble, the companies have sky-high valuations, and currently, not just stocks, but non-correlated assets, for example cryptocurrencies, are also in a bubble. And the best indicator to gauge the extent to which the stocks are overvalued is the Buffett indicator. This valuation metric has surged well beyond its previous all-time high from even the tech bubble, thanks to trillions of dollars in monetary and fiscal stimulus since the onset of the pandemic. So the Buffett indicator is in fact the stock market capitalization to GDP ratio. When valuations reach historic extremes or even extremes relative to recent years, the risk of a bear market can rise tremendously, which is evident from the vertical lines on the graph. Before we proceed further and unlock further critical pieces of information, as you know that my goal on this channel is to help you in making your money work harder, smarter, and in long term. Therefore, if you have a savings account with a bank and you are earning just 0.5 or 1% interest on it, which is way below the inflation rate, and that actually means that you are reducing your purchasing power with time, why not earn a 9% interest on your hard-earned money and make your money work harder for you? And you don't even have to worry about the price volatility. Literally, without lifting a finger, you can earn good interest. You can achieve that by using the Blockify platform, which is a platform that I recommend. They are not sponsoring the video, but let me tell you, even on the top of the great interest that you will be earning, you can also earn up to $250 when you sign up via my referral link, which is down in the description. The Blockify platform is intuitive, it is very secure and easy to use. I will appreciate your support to the channel. It will help you and it will help me also. Let's win together. So even though many people believe that the current high valuations will be resolved by robust economic growth, history suggests that it is not realistic. With the economic recovery in full swing, nominal GDP grew at an annual rate of approximately 13% last quarter, yet the Buffett indicator is still at an all-time high. Therefore, I am convinced that we are in a bubble. And when I see people buying the stocks of companies with the PE ratios of 50, 100 or even higher, I am literally shocked. Let's just look at the EV market. Two car companies in that market segment, Lucid Group and Rivian Automotive, are valued at a combined $200 billion. And it definitely raises some red flags, because when I look at their PE ratio, their free cash flow and other important financial ratios, I simply neglect them. But on the other hand, many retail investors are still investing in them and they believe that these car companies will change the world. To me, this sort of market sentiment shows that the market is in euphoria, where the pragmatism and knowledge is overshadowed by emotions and herd mentality. Furthermore, economic growth cannot sustain that supersonic pace going forward. Consequently, the extreme reading in the Buffett indicator is unlikely to quietly disappear without a major bear market. And let me tell you that today's valuation problem extends beyond just the Buffett indicator. As shown in the table below, the stock market is more expensive today than at nearly every market peak in the past 60 years, regardless of the valuation measure. Would you believe that? It is unimaginable. In short, no matter which valuation measure you choose, stocks are extraordinarily expensive relative to history, even when considering the strong GDP and earnings growth experienced thus far in 2021. No, even though high valuations might not be an effective timing tool, they definitely reflect the risk level for an investor. And with the current valuations, I am convinced that investors will have very little margin of safety in the current state of the market. Now let's look at the portfolio of Warren Buffett and see what he sold during the third quarter of 2021 and 2021 overall too. In 2021, he has sold stocks that are worth 4 times more than the stocks which he bought, which is very unconventional for a person who believes in holding the stocks for the long term. I mean for very long term. So his portfolio looks like a sea of red, and he has sold way more stocks as a percentage of his portfolio than he bought. And what does that mean? It means that he is cashing out and waiting for the opportunity to buy stocks at low prices when the market correction will occur. And that is also evident from his cash position and also what the Buffett indicator reveals. I hope that you like the content of this video. Please let me know in the comments below. Do you think that stock market is in a bubble? If yes, what is your strategy for the bull market and the expected upcoming bear market? Also, as I mentioned before, I have placed a sign up link for the Blockify platform in the description below, which will give you up to $250 in free Bitcoin when you use it. It will also give you a 9% interest on stable coins, which is way higher than the 0.5 or 1% interest which you will get if you put your money in the savings accounts of a bank. And 0.5% or 1% is way below the inflation rate, and it means that you will be essentially losing your purchasing power. So let's make our money work harder for us. Thank you for watching the video and appreciating my content. I am really grateful for your support. Stay blessed, stay happy, and let's make our money work harder, smarter, and in long term. And I will see you in the next video.